Good morning, everybody. How are you all doing? Just checking my microphone is working and everything. It's very echoey in here. There's nothing much I can do about this echo because I'm in a new room. I haven't got any blinds up and it's just basically walls. So if it's very echoey for the minute, sorry about that. I will be getting some curtains and stuff. It's all just chaos at the minute. Morning, Danny. Morning, Robert. Morning, Sebastian. Morning, Wozciak. Is it bigger than the last one? It is, yes. Morning, Soul Trader. Yeah, it's but it's echoey, like really echoey in here. Oh, what's that? Weird. I think I know the corner. But yeah, it's a lot bigger. So obviously bigger, echoier. And I think I might have to get some soundproofing on the walls. But anyway, we'll see. I'll watch the video back and see how it sounds. My mouse doesn't move either. Why is my mouse not moving? Anyway, yeah. So this morning, basically, I'm going to go through all the FX pairs. We'll trade the DAX, the FTSE, etc. Usual stuff, basically. Morning, Shroud. Morning, Harold. So we'll see how everything goes. I'm going to do a bit of a catch up on what's happened over the last week because I haven't been basically trading for the last week. I've been doing house stuff. Morning, Fire. Just want to have a quick catch up on what's been going on. I have been monitoring the news sort of every day when I can, but I see the trade wars are kind of bubbling up again. Nothing much has changed with Gaza and Israel. Nothing much has changed with Iran. That seems to have just died and disappeared again. So the markets seem to have gone very kind of flat, especially oil. Super sideways since that pullback, basically, after it's basically a A-shaped recovery. Where's my pen gone? Where is it there? So basically, obviously, that was the Iran thing, and that was the not Iran thing. So we are basically back to kind of flatline situation above where we were previous, but kind of just sitting sideways. So I'm just going to go through everything this morning and just kind of get back up to date, really. Starting off with the news, there's not a lot. This week is very, very quiet. Nothing today at all. We've got the Aussie rate coming out tomorrow, which is going to be dropping by 0.15. So that's still very, very high, the interest rate, but they are dropping it. So sort of bearish potentially for the Aussie. We've got the New Zealand rate then coming out the next day on Wednesday. They are not forecast to change. It's unlikely they will. If you look at the historical on this, you very rarely find them deviate from forecasts. So I don't think we're going to get much of a deviation there. So that's coming out on Wednesday. We've got FOMC meeting minutes. It's not an interest rate decision. It's just the meeting minutes. So typically low impact, although it is a high impact. They can say something, but quite often it's just like summaries of everything we already know. Unemployment claims on Thursday, and then the unemployment rate for the CAD on Friday, and pound GDP. So it's very, very, very light this week for news. Although it's high impact news, there's not a lot of it. So likely the markets are just going to have these big sort of spike movements, but not nothing that's really going to generate any momentum potentially. Over the weekend, as you can see, there's nothing much impactive at all. We've got the trade war sort of starting to bubble up again. We had this 90-day pause, and we're getting to the point now where there's not a lot of progress being made, especially with the EU and other members. So I get the feeling this is going to suddenly start to bubble up again, which is obviously going to send the markets into turmoil. So we'll see what happens, but obviously Trump's got to say something. We've got Elon Musk now setting up his own political party in opposition to Trump. So yeah, we'll see what happens. But anyway, so there's no news over the weekend really that's impactive. There's nothing happening today anyway from a news perspective there either. We'll have a look at the ADRs and everything in a minute. Let's just see what's happening with these opening ranges. So tight opening ranges at the minute. So no trades to be taken at the moment. What's 34.60? So we're going to need a bit more movement to get onto the DAX and the FTSE. For the moment, I've just set my EA settings kind of back to defaults. I haven't got access to my VPS. I've suddenly realized in my old office, I had a hard-wired internet connection. Here, I'm running on Wi-Fi. I've got 1 gigabit Wi-Fi here, basically. So even on Wi-Fi, I'm getting like 300 meg. It's amazing. The entire house is 300 meg everywhere, just on Wi-Fi. The problem is my VPS hasn't got a Wi-Fi card. So I've got to figure out something to do with my VPS. I'm looking down there. You don't know what I'm looking at. My VPS is sitting on the floor down there. That's all. There you go. Get my VPS. There he is. He's not plugged in. So yeah, I'm basically trading just on the live account here, but trading on my actual machine rather than the VPS, which is what I usually log into. So I will be sorting all that out at some point, but I've got to try and figure out how I'm going to do that because I've got no Wi-Fi card. So I'm either going to have to get a Wi-Fi card for it. Look at the back. Probably got a slot for it. Or I don't know. I'll get I was just going to say, I'll get a USB Wi-Fi adapter for it. And I'll chuck a USB one in there and sort that out later. But it's not the end of the world. So for the moment, I'm just using standard settings, and I'm just going to manage it manually, basically. But the all of the trades that I've got running on here as well, because I haven't got the VPS running, the EA is not going to be taking these trades automatically for me. So I'm just going to be hitting the buy and the sell button manually at the moment, scaling in and out of these things as we get to different levels. Oh, that's annoying. So I'm just going to quickly look at this Swiss yen. I was looking for another entry this morning. We looked like we were going to get up there for another entry this morning, but it's come off last week's high. It's too tight. I'm not going to take another one there. It's very tempting. I've got basically 7 on this now. So I'm up at the point now where I do want to get an aggressive position on. But there's no real resistance here, as you can see, that is really of any interest. We're out at all-time highs on this. So that is pretty much the best upside resistance you're going to get at the moment. Do I want to take another one? I'm going to take one. What I'm going to do is I'm going to take a sell there. I'm just going to put a stop above there. And I'm going to do sell stop as well, which I'm just going to move down below that reversal alert there. So this is kind of the equivalent of an aggressive drawdown control position. I'm putting these two on as an aggressive one off of that monthly high, basically. So I'm going to have to take manual trades for the moment with the buttons because obviously I haven't got a VPS running, which I will get sorted out. It's on my list. When you move into, if you've moved into a new home, probably most of you have this list of stuff to do. And every time I get something knocked off this list, about 3 things get added to it. So I literally have been off for a week. Yesterday morning, I got my office set up. So I have been basically completely off grid for about a week. It's lovely. We've had no telly, nothing. Morning, Franco. Morning, Mark. Market's on hold till letters of tariff at 12 p.m. EST. Is it today? Is that... Again, I've been a little bit out of the loop. So he's doing some more announcements on tariffs today, is he? Okay. So be prepared for a little bit of a sideways move. The Swiss franc, basically, as you can see, has been powering up. We had that interest rate drop on the Swiss, but the Swiss is still powering up. So the markets are very worried at the moment, I think, still about what's going on with these tariffs. You can see by the stock indices We are still not really bull. The Dow's now out. If we go out to a higher time frame, the Dow's now out to new highs last week, and looks like we're just going to run that all-time high this week by the looks of things. But it's obviously going to need some bullish momentum, which obviously, if the tariffs kick in, is potentially going to do the opposite. S&P's got out to all-time highs last week, and so did the Nasdaq. In fact, it did it the week before, didn't it? When I was on, that was my last stream, was kind of around about here. So we are out at all-time highs now. We've got gaps to fill. Basically, we've got multiple gaps to fill to the downside on the Nasdaq. So this, I would imagine, is probably an orphan gap now. Whoever's got caught offside there is probably not getting out of that. Same with this one down here. So I think there's a potential for a kind of a failure out of these highs and then a continuation. So if Trump comes out and announces higher tariffs, we're going to get that drop again, which, if it is going to happen today, obviously his announcement, that is when we're likely to get that happening. So I think what we're going to see until that is obviously a bit sideways, but we will see. So we are inside bars at the moment on the FTSE, no trades. We have just broken out that high on the DAX, but again, range is too small for me anyway. I'm using 20% of ADR at the moment for the range. So that's, again, a little bit too small at the minute. So it looks like I'm going to be looking at 30-minute ranges today. So we'll see what happens when we get to those. Should have said, whack a USB adapter into a slot and off you go. Yeah. I will be doing that. Morning, Virginia. Where did you park my Lambo? That's a good question. I have no idea. I don't know where the Lambo is. I don't know where anything is. I literally don't know when. You know that living out of boxes thing? Look. Bubble wrap. My entire world is in bubble wrap at the moment. It's just, I don't know where anything is. Every time I move, I find good stuff I've forgotten about. Yeah, we did that. We went to the tip 3 times. So basically, we've been to the tip twice since we've moved into the house. So we went to the tip 3 times before we moved and got rid of crap. When we got here, we were like, we bought all this crap with us that we don't actually need. So the stuff that we thought we needed, we've even taken a lot of that to the tip. Amazing. Fresh start. Morning, church. Right, so let's have a look through the FX pairs. We're going to go through everything this morning. Just see what happens with these. Just got 1 more minute to go. Haven't got indicators set up on this one either. Oh, organised. I'll be organised by this afternoon. Okay, so the 3-bar range is in. Okay, so FTSE short. I have got a trade on the FTSE. So that one, we are 20% of daily range there. Still ever so slightly too light on the DAX. So the DAX, I'll be taking the 30-minute range break. Assuming we obviously get out of range. So obviously if this just comes and sits inside here for the next 15 minutes, there won't be any trades on the DAX today. So FTSE having a go at a short on that. Obviously if that fails and stops out, then we've got our 30-minute range as well. So have a retest of that if we go somewhere. But we are breaking short on the FTSE. So we'll see where we go on that one. Right, so FX pairs. Obviously, this morning we've got a weekly range hit. It is Monday. Euro odd has hit weekly range already. Is that it? That's the weekly range. Wow. Yeah, so the average weekly range, because these last 2 weeks, as you can see, have been really tight, especially last week. Look at that, last week. I really didn't miss anything last week, did I? So, yeah, absolutely dead on that last week. So that 150 ADR that we've had today, which is basically them selling off the Australian dollar, potentially. Yeah, so they're selling off the Australian dollar ahead of the rate tomorrow. Obviously, we're dropping the rates tomorrow, so they're getting positioned ready for that. So that euro odd is an ADR hit and a weekly range hit to the upside already. So 150 ADR, you've missed your opportunity on that if you wanted to get into it. Reversal alert was there this morning. So there's your M pattern, beautiful retest. So look for a push back down into here, potentially for that to hold up with a 50% retracement, possible. So that's obviously an extension 125. We've got the Euro New Zealand as well. So Euro looks like it's on a bit of a rally as well. So we've got Australian and New Zealand pairs dropping and the Euro rallying at the moment. So Euro New Zealand 150 ADR. Again, that one's just come off the highs. Your 15-minute reversal alert is about to trigger. Your 5's already triggered up at the highs. There's your retest. So again, look for something around 50% of a retracement on that, potentially for a target, which would be roughly 75% of ADR. You've also got the pound odd and the pound New Zealand. Again, they're the same pair pretty much. So just trade one or the other. Those are both ADR hits. Again, New Zealand is selling off because the Aussie's selling off. They both basically tend to do the same thing together. Aussie US is an ADR. That's bouncing nicely down at ADR. There's your reversal alert. You did have a reversal alert in there here as well. So that would have been a reversal alert in there. And then you just put in a double bottom, which is technically a new low. So you got a second reversal alert, but there's your W pattern. Look for a pullback up into there. Hourly chart, that's probably a propulsion gap. Yeah. So you got propulsion gap there and a propulsion gap there for targets to the upside. Also the origin of the move today, which broke that low. So this is probably your best propulsion gap to go for in the middle. Aussie New Zealand, that one's hit. That was a gap down. I'd ignore this one. Aussie New Zealand on a Monday morning is just a broker candle. So this whole candle here is a broker candle. Ignore that. Aussie dollar Swiss. There's another ADR opportunity there as well. 5 minutes. A reversal that's just gone in. You did also have one here. So again, nice push up back into here, potentially. That's your hourly propulsion gap. That's a good upside target. Watch those lows. So there we go. So those are your ADRs today. RSI extensions, there's loads of them. Might as well just go through everything, haven't we? There's no point in looking at these individually because there's tons of stuff. So let's start at the top. So the pairs that I'm monitoring at the moment, Aussie dollar, New Zealand dollar. Not trading that at the minute. Can't find any opportunities really to get into this. As you can see, it's just flat line at the moment. There was an opportunity for a short out of there. Didn't quite get there though. So the last short opportunity was there, which would have worked out very nicely for you. But it is range bound at the minute, Aussie, New Zealand. There's a good chance that this is going to change this week. Obviously, tomorrow morning we've got the Australian rates. Wednesday morning we've got the New Zealand rates. So we are going to be dropping the Aussie, New Zealand staying stable. So that could go absolutely anywhere. The Aussie New Zealand is a very, very difficult one to trade because it just decides what it wants to do when it wants to do it. And there's no real rhyme or reason behind movement on this. We've had lots of times where we've had no change on the New Zealand interest rate and it's gone parabolic, like properly parabolic for weeks for no reason. So there's obviously a reason, there's always a reason, but it's not because the interest rate didn't change, but they use the interest rate changes as a catalyst to start these moves off. So this one could go absolutely anywhere this week. So I'm going to leave that alone at the moment. Wait for it to get somewhere and wait for it to do something, and then try and get a trade on it at some point. Aussie US, it's a good long opportunity to be on the hourly. Don't really want to be buying the Aussie ahead of an interest rate drop though. So, I mean, this is technically a long, but it's really coming down because the Australian interest rates are going to drop. So I'd be more interested in getting into it somewhere down here or back down here. So buying out of here, if we can get down there this week. Obviously, US dollar as well. If Trump comes out this afternoon with new tariffs, the dollar's going to go somewhere. We don't know where. So depending on what he says and what he decides to do, we could well see a lot of weakness coming into that dollar. We could also see a lot of strength coming into it. So, if the Aussie is going to really power down this week because the interest rates are dropping, if the US dollar also powers down because Trump introduces new tariffs, all you're going to get is that. It's not going to go anywhere. So strong US dollar, obviously, this week. If Trump's tariffs make the market stronger, this thing's going to come down really hard. So I'd be looking to buy it out of these areas down here. But we'll wait and see what happens tomorrow. Tomorrow, this will probably get another ADR to the downside. Swiss yen, I'm stuck in this at the moment. I can't really get anywhere because we are... stop order in there. Oh, it's because I'm on the chart. It's adjusting the order. So Swiss yen taking another short, looking to get another short on at the moment on this. It's not extended. It's not going in. It's just grinding at the moment. The Swiss franc dropped interest rates back down to 0, but we are still buying the Swissy because we are still worried about what's going on with war, Trump, everything. So the markets are still kind of, although they're showing kind of greed to a certain extent. If you look at the last fear and greed index, I have to go back a bit to find that one. There we go. So although we are sort of showing greed, this is the crypto one, but it'd be the same as same for the FX side of things if we can find it. Go back further, but we've obviously got this strength in the Swiss franc, even though the interest rates have dropped, because the market is still putting money into safe havens at the minute. It's cautious. Very cautious, because this can change very, very quickly. So I've got this short order built on this at the minute, roughly in about 4.5% of drawdown. So my average is actually not too bad. I'm not worried about it really at the moment from an average perspective, because it's only 175 ADR. We need one decent day or a couple of good pullback days, and this one's sorted. So I will do some drawdown control on this. As you can see, I did some DD control. I've already banked on it a few times with drawdown control. So I'll just keep doing the same on this one, doing drawdown control when we get the pullbacks. But I want a good ADR's worth of pullback basically on this. So we'll see what happens. This could well move this afternoon when Trump decides to announce what he's announcing. Euro CAD, I'm still in short at the moment. Again, this one is just, this Canadian dollar has been dropping back on the oil price. Euro seems to be quite strong at the moment as well. So we had the lovely pullback start last week. We hit that double bottom. So I'm looking for a retest back down here at some point. So I'm hoping that this is a market structure break to the downside. So we broke, if you look at the 4-hour chart, it's a bit clearer. So we've got a structure break to the downside now off of the monthly high. That's last month's high. So that's last week's high basically there. So we're looking basically for a continuation short back down into this propulsion gap. Yeah. So it may well sit around. Again, we'll have to wait and see what happens with it. But I'm looking for that to continue back down to the downside. Euro Swiss, we've got a nice extension on that as well. Or rather, we did have a nice extension when that entry went in. We got embedded up there for that entire week, which is where I was scaling into it. We've got a couple which are a little bit too close together on this. So if we can get pushed down into last week's low, what I'll probably do is take that one off and take that one off so that the spacing is more accurate, and then hopefully come down. Potential head and shoulders pattern forming here. Euro Swiss, again, sideways on this. I'm short on this at the moment. I've got 2 positions on it. As you can see, I've already banked on this one once. I've got these 2 on at the moment there, which sat around in for a week. I've been sitting in profit on this for the last 2 weeks, but I haven't taken it because we've still got that strength in the Swiss franc at the minute. So I'm just holding this at the moment. If we come back down into this monthly low and this monthly low here again this week, I will probably take these off. In fact, what I'm going to do is I am actually just going to stick TPs on these, which I don't normally do, but What's that? 280. It's about 400 odd. So I'm going to just, if we get an ADR hit on this today, I'm just going to basically take that off because it's been sitting around for 2 weeks, and every time I've looked at it, it's kind of just sitting there doing nothing. So it makes sense just to take it off, but we will see. Euro pound, that's pushing up nicely. Haven't got any trades on this at the moment. There was an opportunity last week for a short out of that propulsion gap, but I didn't take it because I just didn't see it, was busy. So if you look at this on a higher time frame, we've come up into this propulsion gap and rejected. It's just kind of all over the place at the minute. It's trending up nicely, but you've got all these lovely big propulsion gaps to the downside to target. So if we can get a little bit more of a push out of this week, maybe even come up and test those highs, that would be a lovely short opportunity. But you've got beautiful divergence gone in, look here on the 4 hour. Oh no, sorry, that's not divergence. Lies. Looked like it was divergence because I thought it was on that bit, but it's not. So yeah, so it's just looking nicely extended to the upside last week. So if you took that one, you're in it and you're in profit. But yeah, just flip-flopping around at the moment, waiting to see what happens with that one. So no entries for me at the moment on that. Pound US dollar, I've got my shorts on. I have actually got my shorts on today, which you probably just noticed. Looking for this to come back down into this propulsion gap to get out. So I've banked on this 2 or 3 times already, done some DD control on it. So I've got very small positions on down here. It's nicely weighted to the upside. So I'm looking for them to break that weekly high, that weekly low this week. Yeah, come back down and retest this propulsion gap. And that's where I'm going to get out completely. So I'll wait and see what happens. Obviously, Trump could rally the dollar this afternoon. He could dump the dollar this afternoon. The pound's got no news until GDP this week, which is on Friday. So there's potential for negative news for the pound this Friday. Our GDP, I think, is going the wrong way. So I think there's a good chance of that negative move this week. So we'll see what happens. But looking for that break, as you can see, if I get just over an ADR, that's back into profit. So I might do some scaling out again, same as this, just scale out, do drawdown control, scale out, do drawdown control. So I've got loads of profit on this. I was looking at my P&L last week on it when we got down to here. I was tempted to take some off, but that's such a beautiful big propulsion move. I think we're going to come back down and test that. There's no reason for the pound to be massively strong at the moment, but the dollar obviously can fluctuate massively. So you're more likely to get a lot more of that type of movement than you are trending at the moment. And if you are going to get trending movement, it's probably more likely to be downwards rather than upwards. So strength coming back into the dollar. And then oil is obviously the other thing that I've got longs on. I'm holding this. I said I would give myself 5% on this as drawdown. I haven't hit 5% on it yet. And it's been sitting there. So if you look at the last stream from last Wednesday before last, which is back here somewhere, I was in about 3.5%, 4% of drawdown. I think that's roughly where I am at the moment. So yeah, I think there's a good chance that we will continue just to grind up. One more conflict escalation and we will get a pop. So what will happen if we do get that conflict escalation is I will take off some of this size down here and then do some drawdown control on some of the upward size as well. But if you look at oil long term, let's go back out a bit longer actually. This is your kind of line in the sand, the $50 a barrel. It's very hard for oil to transact below that price because it's just not cost effective to do so. Obviously that's COVID. But no, it's not. Sorry, that's not COVID. COVID was here somewhere. That wasn't. Yeah, no, that was COVID. Sorry, yeah. So yeah, that's obviously the COVID drop. But as you can see, when we get down to the $50 a barrel, we find it hard to trade below there because the cost of production for oil below $50 a barrel makes it not really profitable to do. So when you get down below that $50 a barrel, OPEC tend to restrict oil supply. And when they restrict oil supply, obviously demand stays the same, which drives price back up again. So we're not far away from that kind of line in the sand where we don't tend to cross very often. And as you can see, we did try and break down below this support and it failed. So where we are and where we've come back up to, I think is probably where we're just going to sort of flip-flop around for a bit. So I'm not particularly concerned by it, and any kind of conflict escalation is going to drive this straight up again anyway. So I don't think we're going to get up to the heights of the Russian invasion. Iran really petered out fast, didn't it, as soon as the US got involved. So yeah, but I think I'm happy to hold this. It's only 175 ADR away for a break even, so it's not the end of the world. Right, I'll go through the rest of the pairs. I'll flick over and have a look at the indices. Don't interest rates dropping favour currencies, so they should go up? No, other way. Interest rates dropping weaken currencies. What do you think about Euro New Zealand? Haven't got there yet. We'll do that one in a minute. Right, Aussie dollar CAD. We'll get to the Euro New Zealand. I'm going to whiz through these. Obviously, as you can see, it's not going to take long to go through stuff this morning because most of it is sideways. So where we were the week before last, we haven't really gone much further, have we? So let's have a look where we are. So the FTSE short break is still on. Yeah, so inside bar. So no trade on the DAX today. It's all inside bars. There's no price action, so not going to trade the DAX. FTSE is short. So that will either be a stop out or we'll break to the downside and that'll be a profit. I get the feeling the market just wants to, as you can see, sit around today and wait for Trump. So not really anywhere we can go with that much today. So watch Friday's low to the downside. In fact, I'm going to just move my partial up. Friday's low to the downside, basically, I will take a partial if we get there. It doesn't even look like we're going to manage that, to be honest, but I think this morning's a little bit of a dead duck. It's a bit gappy as well. So we'll come back to that later. Like your sound in the new room? Crispy, is it? I thought it was echoey. I'll watch the video back, but yeah, the mic didn't work at all this morning. So this is a hatchet job basically today. And I've got this new floor, which is, I've got this new, it's obviously new house, new carpet everywhere. So I bought these plastic mats that you put on carpet and they're really slidey. It's really good fun. But it means that every slight movement I make, everything shakes. My chair swivels around and it's really, I'm trying to get used to it. It's going to be an interesting week. Right. So let's start off with Aussie dollar CAD. As you can see, Aussie CAD sideways. That's your last month. Sorry, that's your last month. That's the last 2 months. We are going absolutely nowhere. So buying range lows, selling range highs is at the moment the thing to do if you can get to them. So there's a nice hourly RSI extension to the downside there, but obviously this is because they are selling off the Australian dollar because interest rates are dropping. So this propulsion gap at ADR today is probably a good intraday long if you can get there. Failing that, obviously looking to buy these lows at some point if we can get back down into there. So that looks like a good little long opportunity. Aussie dollar Swiss, RSI is extended to the downside. Again, Aussie dollar dropping on interest rates. So potentially, yeah, just coming down into that propulsion. So it's a very nice sort of market structure short at the moment. We are just grinding down. So I'd be much more interested in shorting any pops, but I mean, that's the last pop you had, which was 2 months ago. So you had a little one there, but very hard to get in short on that at the moment. So you could take a pullback if it was to get back up into the Friday low and Thursday low. that would be a good little short opportunity. So you'll probably get an extension. Watch the 15-minute RSI. If you get extended on the 15-minute today, you'll be up here. So this is your my line's drawn over there. It's because I haven't loaded any data for a week. It's slightly off. So that's Thursday's low and Friday's low. Don't forget Friday was the 4th of July, so there was a lot of slippy price action on Friday. But Aussie Swiss obviously not affected by that at all. So that's a pretty decent low. You got this weekly there, which they've definitely resold again. So you might get a reaction out of there. So today on this one, if you want to take shorts, that's the obvious spot to get in short from there. Aussie dollar yen, sideways completely. As you can see, we are going absolutely nowhere. These yen pairs are a little bit stuck, but nowhere. We had a failed price discovery to the upside. So the next price discovery attempt will usually be the opposite. So looking for a test of that propulsion gap to the downside. So that's a good looking sell. We just had a reversal alert on the hourly out of the RSI extension. So beautiful short opportunity. Yeah, looks good for shorts. It's just obviously you missed it. It was last Thursday. So that was your entry on this one last week. Lower time frame last Thursday, your reversal alert was there. In fact, your reversal alert came on Friday morning. Oh, no, it didn't. Sorry, it was up here. So very, very late on Thursday evening was the reversal alert on that one, off the back of that news spike. I presume that's a news spike. So yeah, failed price discovery to the upside. 4-hour RSI extension as well. And you got monthly high, previous resistance, that propulsion retest. Keep adding shorts there. Look. So target to the downside, somewhere down at the monthly lows. So there's your monthly lows here. So plenty of room on that. Whether we get down there or not, we'll have to wait and see. That's a Trump move. So CAD Swiss. So last test of those monthly lows kind of broke. So we've had the reverse alert pushing back up. This is the propulsion move that broke that monthly low. So this push here is what they're adding into at the moment again. So this one could go either way, obviously, because it's a Swiss franc pair. This will go either hugely up or hugely down, depending on what Trump says with those tariffs. He may come out and be very neutral on them, in which case then we go anywhere. But the Swiss franc obviously is a safe haven. So if we have bad news, then obviously the Swissy is going to power up. If it's good news, then the Swissy will obviously relinquish as it should be, because interest rates are down at 0, and we'll get that push back up again. So not really much you can do with this one at the moment until we get some more news as to what's going on. If you go down into lower time frames, obviously we seem to be holding this area at the moment, which is where they resold. So anywhere down there would be a good little buy. But other than that, that was your short on Thursday last week. Worked very nicely. You had a long back here. But yeah, stuck at the minute. CAD yen, again, all the yen pairs are very much the same. We are sort of in a holding pattern with these yens at the minute. I think, again, I want more evidence, basically, but the yen seems to have lost a lot of its safe haven status at the moment. We're not getting those massive drives into the yen that we used to when there was trouble. The Swiss seems to be the sole beneficiary. We are getting a little bit of movement on the yen, but very, very, very sideways at the moment. We'll have to wait and see what happens with it. But obviously, since that last intervention, we are holding, and that is all we're doing. Yeah, so there's no directional bias on this. So the yen pairs at the moment, this is one of the reasons I'm not particularly worried about my Swiss yen at the moment, because we are very much in a holding pattern at the moment on all these yen pairs. So with all of these, I think it's a case of just sitting around and waiting to see what happens. But you can long and short pretty much any pop on it, and you're likely for it to work out, because it's very range bound. So any kind of big strong pushes in, they're reversing the majority of those moves. So it's a moment, it's just waiting for signals on them. But obviously don't over leverage on them. They all do very much the same thing. If you look at all the yen pairs, they're all very sideways. So if you get into a load of yen and it all goes sideways, you're just going to be stuck. So last month made about 15% using ORB. Good job, Vitali. Well done. Looks like I'm going to stop out in the FTSE this morning. Not going anywhere. So yeah, sideways on that one. Sell the highs, buy the lows, basically. Any RSI extensions in line with that, brilliant. Take it. Euro odd extended out to the upside. Obviously, this is the Australian dollar weakening on interest rate drops. So at the moment, you've got an RSI short and it's an ADR short as well, which is lovely. You've got confluence, but when you get that big, strong move to the upside on interest rates, just be aware that it's more than likely going to flag than it's going to reverse. Yeah. So there is a reason for this. The interest rates are dropping in Australia. So obviously that will weaken the Aussie. So big push up to the upside. Watch this propulsion gap for buys if it gets there. So if you're shorting the ADR reversal this morning, or you're shorting the RSI extension this morning, you'll have got in up here somewhere on the reversal alert, and you've just got in on the 15. So that really is your target to the downside, which is Friday's low. That is your weekly high. Friday's high, which is your weekly high. That is also a monthly high as well. Yeah, so that's the June high. So we've hit the June high. We've hit the June high, hit the June high, broken the June high. So June high will now become support. So if we do get there, make sure you get out of any shorts and look for, obviously, reversals, flip and reverse long. So those look good if it gets there. Euro yen, again, same sideways, very much sideways for the last week. Can't do anything with it. It is grinding to the upside. This euro has got some nice strength coming through now, which is unusual. But we know that they've frozen interest rates after a continuous drop. So that makes it no longer bearish. And obviously now they're starting to take profit on those legs where they've been putting in the drops. So what we're doing is we're basically kind of unraveling. But this is obviously yen. So with the yen being neutral at the moment, anything that pushes is obviously going to take advantage of it. So propulsion gap coming up, but that is the intervention. So not really going to be a load of sellers, short sellers in there. If it does come out of there, it will just be psychological. But beautiful extension. Look, this will be extended on the daily RSI. Look at that. Beautiful. So, yeah, really nice short opportunity all of last week. Or the last couple of weeks, basically. In fact, pretty much the most of last month for scaling into shorts to pull back on. I don't think we're going to get back up there. If we do, there's something fundamentally wrong with the yen. So, yeah, really good short opportunity at the moment on that one as well. On a daily, don't often look at the daily RSIs, but you know, you can see this is grinding and grinding and grinding. There's a big drop coming on it at some point. Probably when Lagarde announces the next interest rate drops, but that's not going to be for another month. So we'll wait and see. Euro New Zealand, big pop out the upside there. Broken through the last propulsion gap, so nothing but propulsion targets to the downside, all over the place. So good looking shorts, nice RSI extension to the upside, 4-hour RSI also extended. So again, nice short opportunity there. Sat around for the last couple of weeks, not really doing much. So your last short entry on the 4-hour was there. Had one there as well. This is obviously the new one. So yeah, good short. Drop down M5, M15, probably already had the alert. No, not yet. So your reversal alert is just about to go in on the 15-minute. You've had the 5 off of ADR. So 150 ADR, continuation short. That's good. Euro New Zealand. Euro US dollar, not gone anywhere for the last week, is it? So last week, basically, we kind of ended up in the middle of the range. So we've broken out these highs. So that's your propulsion target to the downside, about 175 ADR. Not extended though. There was no entries on it. You had an entry back here, but it didn't go anywhere. So if you took that one, you're probably in a second there. What's it? 77 ADR. So you'd have got in somewhere around there. So yeah, definitely you'd be in too short on this at the moment with a break even. So target to the downside. Obviously watch these highs. That's likely where we're going to bounce if we are going to bounce. But again, we need to wait and see what happens with the US dollar. What Trump says. Nice extension to the upside on the pound odd. Again, watch this one because it is weakening on a fundamental. So I'd much rather get up there and then short that. That'd be nice. Off-topic question. Any way to prevent MT4 and MT5 from updating automatically? MT4 doesn't really update automatically very often. MT5, I don't know, to be honest. That's one for Google. You probably can set auto updates off somehow. I mean, it does prompt you, doesn't it? I don't know. It's mainly MT5 is the main problem. I don't use that. So the reason I don't use it is because it auto updates, it breaks all the time. So yeah. We need a Trump indicator. Well, that is your Trump indicator. Just keep your eyes peeled on this one. This is your Trump indicator. What we need is a Trump predictor. That would be nice. A leading indicator, which is basically somebody in the White House that knows what Trump is going to say. Whoever writes his speeches for him, that's your indicator. Yeah, but that's a nice little short at the moment. You've had your reversal on that one already this morning. So there's your end pattern. So watch this high. So that is your hourly propulsion gap. There. So good looking short opportunity out of that propulsion move as well. So this is where we broke down below those lows. Yeah, so this area here is where we broke up, retest, 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 broke through it, retested, retested, bang. So that's your first re-add into that area there. So if market structure is going to hold, we'll be going down to test these lows. So pound not particularly strong at the moment. Australian dollar, yeah, will be weak. I mean, don't forget, there is obviously the possibility that they do not go to 3.6. Again, very, very, very rare. You need to go back to August 23 for the last time they made an unscheduled change. They don't do it. It's very rare. This, you know, the only country that occasionally fluctuates, or regularly fluctuates, I should say, is the Swiss. They regularly come out and do something completely different to what they've said. All the others, it's got to be something very, very recent and very impactful that will make them not do what they forecast, because they want the market to do what they want the market to do, and this is the way they tell the market. So you need to pay attention to these, obviously, but we don't get a lot of deviation on them. So you have to be aware that it can happen, but the likelihood is that we will see some short-term weakness in the Australian dollar. So I'd like to be shorting up there. So if you're getting in here out of that propulsion, be prepared to get out there ideally, because market structure is probably going to do that. But after all that movement, we'll probably get a bigger pullback. That's where I'd like to start getting interested in shorts. And again, we'll be extended again by the time we get up there. So looks good for shorts. At some point, you could get into it today. You know, nothing wrong with that as an intraday trade. Pound CAD, shorts out of there. Is where we broke down. Again, the Canadian dollar and oil very interlinked. Oil at the moment starting to rally back up again, trying to rally back up again, I should say. So it's kind of, you see they got the reversal there, the structure break. So that shows you how weak the market is. Yeah, it took 6 days to actually put in a reversal of structure. So back up into here is where I would be looking to eventually head, but that could take weeks to get up there. So the Canadian dollar at the moment could strengthen up on oil, in which case then you want to be selling this. So yeah, some kind of pullback short on it. So anywhere up there would be good. Obviously, that was your long opportunity from Wednesday last week. It is going your way. You are in profit, but it's not particularly great. It's just not moving very quickly, is it? So anywhere up here is where I'd like to be looking for shorts if we can get that extension to the upside. Pound Swiss, very much down, obviously, on Swiss franc strength. Again, this is all to do with the market being worried. And as soon as the market is not worried anymore, we'll be off. They will just unravel that Swiss franc. There's a lot of Swiss franc to unravel as well. A lot of money has been coming into the Swissy. Obviously, that's the Trump tariffs. But yeah, I mean, the market, as you can see, is still very worried about what's going on with conflict and with tariffs. So we are going to continuously potentially get that move while we have that worry. When we haven't got that worry anymore, if things start to calm down, we will be definitely going back up there again. So these longs, if it's going to continue doing market structure moves, which it's not really at the moment, but you should be okay back up to previous resistance. So whenever you're longing against the trend, you're always looking for where we're potentially going to be going, and you're always looking for those previous lows, which will turn into next upside resistance. So any propulsion gap to the upside, and this is why we use propulsion gaps as targets, is potentially a bulk area of sellers that are going to start that next market structure leg to the downside. So if you're longing this extension here, you want to be getting out in here or here. Yeah. So those are where we're likely to find the next batch of sellers coming in, as long as nothing changes. So hourly RSI extension to the downside you had last Wednesday on that spike. So again, nice divergence there. Not very slight, not really actually, but yeah. So like it. At the moment, would rather be shorting it with the trend while the market is worried. So if we can get any RSI extensions to the upside on this, I think they're probably something I would rather take than trying to long it, but we'll see. Pound yen, again, same as all the others. We're kind of in a big holding pattern at the moment, sideways. So we are back up into the highs here. Slightly lower highs going in constantly. But again, this one very difficult to call. It's going to be dependent on what the pound does. The yen seems to be very neutral at the moment. So any kind of strength in the pound, off we go. Any kind of weakness in the pound, off we go. So we've got pound news coming out Friday with GDP. The forecast for the GDP numbers is not in for some reason. Interesting. Why have we got no forecast on that? So yeah, don't know what it is. Negative 0.3. So could go either way, that couldn't it? We'll see. I mean, we have to wait and see what happens on Friday. Hopefully that forecast will fill in. Don't know why that's not gone in. Yeah, so at the moment, as you can see, we had the RSI extension signal week before last. That was coming down nicely. Hourly had an extension there and there. Again, divergence. So nice bearish move off of that. So market structures clearly broken back to the downside. We have just put in a new high though. So we've broken back up. So this is either going to do that or it's going to do that. One of those two things is going to happen. So just plan accordingly. At the moment, there's no signal. You had a long from last week, which would have worked out very nicely. So trending up, but very, very gradual. It's not, you know, you can almost take any signal on this. Doesn't matter. if you get an RSI extension to the upside, short it. If you get one to the downside, long it. Likelihood is it's going to continue market structure and you're just going to get out of it at some point. So no real directional bias. Pound New Zealand should be long based on the New Zealand dollar. New Zealand dollar will weaken with the Aussie dollar. It also has its interest rates on Wednesday, but when we get those interest rate decisions on the New Zealand dollar, this will just go somewhere. If you go back and look at the last interest rate decisions on the New Zealand dollar, you'll see there's a confluence with the thing going mad for no reason. 28th of May was the last one, which is there. So, the interest rate didn't change. Yeah, 3.25. Oh, no, sorry, it did. It came down. Yeah, sorry, no, it did come down that time. So interest rates come down, New Zealand dollar powers up. Yeah, so we get this thing with the New Zealand dollar where it just will do what it wants to do. Sometimes it goes in line with forecasts. Sometimes it just goes crazy and you just don't know what it's going to do. It just takes off for no reason and just goes. So just be aware on Thursday, if you're getting into a short here and it just goes, brilliant. If it goes that way though, be prepared to be in it for a while. Yeah, you could be in it for weeks. It just won't stop going the wrong direction. So just be aware of that. We are nicely in a range at the moment though. So you've got this range high, range low. So a short here is not a bad idea because you've got 225 ADR, you've got resistance to the upside, this propulsion move. So there's a good chance that will hold and give you some kind of traction back down to the downside. But yeah, difficult one at the moment. All the New Zealand dollars, same thing. So all the New Zealand dollar pairs at the moment selling off with the Aussies. Love to take a long out of these lows here. So if you get an ADR hit today, that looks really good for longs. You're already extended on the RSI. In fact, it's already pushing up a little bit, isn't it? So nice looking longs. New Zealand dollar, Swiss. Again, Swiss franc, really, really strong at the minute. I can't see any reason for it to really change. So any kind of pullbacks, RSI extensions to the upside, great shorts. But as you can see, you're going to find it very hard to get in. When you're seeing this sort of price action, you want to drop down onto lower timeframes and take the 15-minute pops like these. It's very, very strong at the moment, the Swiss franc. Any kind of negative news or scare in any way, shape or form will just drive the Swiss franc up, which means everything obviously comes down against the Swiss if you've got a base cross against it. So yeah, continuation that way. So just trying to find a way to get into it, basically. If you're going to mean revert it, just don't go for much of a target. Look for quarter to a half ADR max. You had one there. That's a gap down. So you had one there. Got a nice move out of that one. You had one there, which again, you got quite a nice move out of as well. So there's a good chance that you will get a pop above that high, but I don't think it'll be very sustained. New Zealand dollar yen sideways completely. Not a lot you can do with that. It's a brilliant sell right now and assume that we're going to come down into these lows. That's all you can do with that one. New Zealand dollar, US dollar, again, same thing. We're waiting on this US dollar at the moment. Very neutral. It's very jaggedy, obviously, because of what Trump's doing at the minute. But there's no reason for the New Zealand to be particularly strong. It's neutral on interest rates. So this is going to get pushed around by the dollar, whatever the dollar does. So if the dollar weakens, that. If the dollar strengthens, that. At the moment, we've had that nice run. So, yeah, I like it down here for a buy, basically. It's really extended at the moment. If you get down below the 80 RSI, which we are touching now, so if we get an ADR on this today, that's a good looking long. But obviously, this is dropping on the Aussie dollar interest rate reduction. So somewhere in here is potentially a good buy area, 125 to 175 ADR. This high here is that propulsion move. So anywhere in here really is a good spot to sort of buy it back up into this area here. But I'd like to see it further down first. US dollar CAD, cool, that's rallying today, isn't it? Look at that. So a lot of US dollar strength coming in this morning. My pound US dollar will be coming down nicely. So yeah, nice moves to the upside, coming up into resistance at ADR. But yeah, at the moment, could go either way, really could. So again, the US dollar at the minute, I think you can kind of almost buy the dollar or sell the dollar whenever you get any RSI extension, because at the minute there's so much uncertainty with the dollar. It's obviously weaker than everything else because of what Trump's doing to the economy. But equally, it is moving a lot on news, and it's moving a lot on what Trump says. So you're getting spikes all the time. The market is using these spikes to put these big moves in, all the news it's using. So it doesn't really matter what you do. You're likely to get a big enough move to get you out of it. It's grinding down, and it will continue to grind down all the time Trump is upsetting the world with tariffs. So, you know, it's going to weaken the dollar. You can't trade with the dollar, therefore the economy will shrink. Fact, yeah. You can't look at it in any other way. The dollar is going to drop as long as they charge more in tariffs, because we just won't deal with them. Therefore, they do not get the business. Therefore, their economy shrinks. So GDP drops, everything drops. He wants to drop the interest rates by 1 to 2% to help boost the dollar. And make it more attractive for people to borrow. But what you're doing is you're just making it more attractive for people to borrow. Who gets rich out of that? The banks, not the people. So, you know, it's not making America great. It's making America's 1% greater. So, yeah, it's difficult. But I can't see any reason why the dollar should recover at the moment. If he comes out with a new tranche of tariffs which are going to upset business, it's not going to be good, is it? Stock markets are going to come down and the dollar will probably drop. So you got a nice RSI extension to the upside there. But it's good for a short. So wait for some price action to confirm it. So reversal alert is going to go in there on the 5-minute, 15-minute, roughly the same spot. Yeah. So, but we got quite a bit of news this week, obviously. Not US based. We've got unemployment claims and we've got FOMC, but FOMC is really not going to upset. It's just going to confirm really what we already think. So that's it news wise this week. There's nothing else. It's all Australasian this week and Canadian. So like that for a short. US dollar Swiss, love it for a short. Obviously Swiss franc really, really strong at the moment. And the dollar is weak. Yeah. So no reason to do anything but sell this one at the moment. But obviously that can change. So looking for pops. If we can get a push up into there or back up into that weekly low. Failing that, you're looking at coming up into this propulsion gap here. So there's a nice short opportunity out of there. 3 trades, average, continue short. And US dollar yen, middle of nowhere, nothing you can do with that. It's just rubbish. The entry was back here last week. You also had an entry there. So you'd have got in long on that. If you didn't take that profit, which you probably wouldn't have, you'd be targeting there. You'd have taken maybe another short there, along there, but another long there. So you're in profit on it out of those 3 trades. Nice short there. You know, either way. Neutral. So basically this, whenever you see a currency that's neutral, like the euro or the yen at the moment, where there's just nothing going on with it, it's just kind of flatlined. All you're really doing is you're looking at a dollar strength meter here. When the dollar powers up, this goes up. When the dollar drops, this goes down because the yen is doing nothing. So, you know, it's very much the same with the euro is actually a little bit stronger, but it's very much the same with the euro when the euro is neutral, which it quite often does, just goes to neutral. Hasn't for a while because obviously we've had interest rate drops, but it's kind of just turns into, it is the dollar index upside down basically. So there we go. There's all your pairs. Done. there's a lot of opportunities to get into. The Aussie ones are the ones you really want to be a little bit careful of, because obviously that is to do with the interest rates tomorrow. So I would imagine those will continue to come down, but we will see. Just quickly going back to the FTSE, yeah, stopped out FTSE. So nothing much I can do with that one today. It's not going anywhere. DAX, untradeable. So yeah, nothing to do with the indices. We'll see this afternoon. We'll come back this afternoon, have a look at the US indices and see how they get on. Nothing much going on with them today either at the moment. Okay, anybody got any other questions or anything? Have you ever been offered huge amounts of money to trade? No. Well, no. I don't know. Depends what your class is a huge amount of money. People ask me all the time to manage accounts for them. I don't do that. You have to be regulated to do that. I could manage it off the books, but not interested in doing that. Managing other people's money always leads to problems. Sebastian, thank you very much for the €5. That's for your effort adding the second account to the portfolio dashboard, EA, although you're moving house. Thank you very much. So I was working over the last week when I could. That's very much appreciated. Thank you for that, Sebastian. And can you please show the settings from the POS EA that I can use for MT5? I can. One sec. Just catch up with that chat. Made bank on Japan session tonight. Getting needed sleep. Okay. Robert, I'm curious as a coder, why don't you use CTrader? I'm curious as a coder, why don't you use MetaTrader? Personal preference. There's no advantage using CTrader. If you're a coder, you don't use CTrader because CTrader's for idiots. Well, not for idiots. That's a wrong terminology. For dummies. Because CTrader uses a very dumbed down version of coding. You don't need to be a coder to use CTrader, do you? You can just type what you want. But it's personal preference. New room looks nice and light. I know, it's good, isn't it? It's like I've gone light. But it's because I haven't got any curtains. Literally, I have no curtains. So yeah. What's the reason I moved? Just to move. Basically, just wanted to get rid of the mortgage at the end of the day. Main reason. Right, so position trader. So I don't know what you want to know, Sebastian. Show the settings for the POS EA. There isn't a settings as such. It's whatever you want it to be. So Franco, thank you very much for the $5. Hey, it's tip morning. I like this. Thank you, Franco. Much appreciated for the $5. And beer. I will buy a beer with that. We've got a new bar that's just opened around the corner from where I live. Went down there on Saturday. So it's entirely down to you what you want to use. The Position Trader EA is not this is the settings EA. It is a tool for position trading. You can trade any way you want to. But I personally run, and again, risk is up to you, but you can screenshot this or go back to replay and just watch this. But the set files in Discord you can use as well. But I risk 0.25%, 0.2, 0.25 on initial trade. The more you risk there, the more aggressive you're going to be. Obviously, higher risk, higher reward, higher risk, higher risk. So up to you. But you're going to go into a lot more drawdown if you use higher risk. Always do my calculations over 1 ADR, just because you've got to have something. So that's what I use. Additional entries, I use 3/4 of an ADR distance. So basically what I'm doing is making sure that when I get into a trade, my spacing between the trades is a minimum of 3/4 of an ADR. So the main thing that kills people when they're position trading is they space their entries too close together or too far apart. If you go too far apart, 1.5 ADR, for example, what you're going to find is you'll take a trade and then it will push up 1.5 ADR against you. You'll take another trade and then it will pull back and continue market structure, which means it never gets back to your break even. So the idea behind using 0.75 as a sweet spot, 0.5 some people use as well, which is fine as well. It's just a little bit more aggressive, is that we know that the price moves an ADR. So what we're looking for is we're saying, if I want you to pull back 3/4 of an ADR. So any kind of market structure movement is going to pull back usually 1/3, 1/2, or 3/4 of an ADR and continue. At some point, you're going to get to a point where we have a reversal in structure. So as long as you've got your distancing spread nicely, as here, look, this is a good example. Yeah. So there's a 50% retracement. There's my average. Yeah. So if we pull back now, market structure like that, I have an exit because of my spacing. Right, so at the moment, I'm using 1 ADR as an exit target. On manual here, it's not using that at all, but 1 ADR. So basically, my target is always an ADR beyond my average. But again, it's personal preference, entirely up to you. Backtest, or always backtest. So the best way to teach yourself how to use the EA and how it works is to backtest with it. Stick it in the backtester, run it in visual mode, and test. See what difference you get in drawdowns. See what difference you get in targets. Watch the market move. Watch how it plays out over time. And then set it to your personal preferences. I don't use automatic drawdown control. Obviously, those settings are there if you want them. I don't use aggressive drawdown control. I do that manually, but this can do it all for you. RSI 70/30 on the hourly. That is what I'm using at the moment of my entry criteria. So it will automatically get me in 70/30 RSIs. Although at the moment, I'm still doing that manually just because I am obviously in a little bit of flux at the moment. ADR reversals, obviously, you can set whatever you want there. I use 3-bar reversals and reversal alerts. Again, this is not my VPS, so this is just not set up exactly as I have it. But market reversal alerts and 3-bar reversals. The aggressive way is using a moving average entry, which nothing wrong with using a moving average entry. It's just a little bit more aggressive. You're going to get different signals. At the end of the day, a signal is a signal. It doesn't matter which of those you use. There isn't one that's better than the other, because here, for example, the reversal alert triggered. You would also got a 9MA trigger there, and you wouldn't have had a 3-bar reversal there because there wasn't a solid 3-bar reversal pattern. So if you set all of those to true, it will mean it will just get you in whenever there's any strength in the other direction. That's what we're looking for. When the market's pushed, we're looking for that reversal. So the reversal alert. Yeah. The early version of it is the moving average cross. The really early version of it is the 3-bar reversal, but that doesn't always happen. Yeah. I mean, there's no 3-bar reversals. There's a 3-bar reversal, and that's not even really there. Yeah, I mean, there isn't any 3-bar reversals there. But when you get a 3-bar reversal, they're really good. So that will trigger less. But that's, the reversal alert is the signal. It's a complete structure break. Yeah. The last batch of sellers were overpowered. Yeah, when they take control of the market, that is when you expect a continuation back the other way. So auto trading is set 1 to 11 just because it filters out the broker candle. I don't use time-based exits. Everything else you can see there. But if from a settings perspective, my kind of bread and butter at the moment is 21 RSI on the hourly, yeah? So if we get an hourly extension, yeah, that's my bread and butter. Yeah, 70/30 on the hourly. If you want to be if you want to be more tight with your entries, go 80/20. But again, there's no right or wrong. 4-hour, you can trade. Hourly, you can trade. It doesn't matter which you use. We're looking for a push. How you measure your push over what time is entirely up to you. But, you know, when you get those 80-20s, like that one and that one, it didn't quite there and it didn't quite there. But, you know, it didn't quite there either. But, you know, 70-30 is a more of a loose signal. 75-25 is a better signal. 80-20 is brilliant. But it's all to do with US dollar CAD ADR. It's all to do with how aggressive you personally want to be. And again, there is no right or wrong. I say this over and over again, and I've said it for 5 years in here. There is no right or wrong setting for anything. The opening range breakout EA today, the right setting was not to trade anything. If I'd have known the market was going to do this today, I wouldn't be trading it. Yeah, there isn't the right setting until the market's played out. Then you know what you should have done, but you can't do that. So you pick a setting that works the majority of the time. So the majority of the time, if you take an RSI extension above 70 and below 30, the majority of the time, those trades will work out. Sometimes, like that one, they don't work out, in which case then you turn that into a position trade and you scale out of it. 80-20s, there's one behind my head here. Yeah, pretty much 100% strike rate. But you're only going to get 3 trades in March, April, May, June, July, 4 months. So maybe you'll get 1 trade a month. But those are incredibly high strike rates. So there's nothing wrong with using the 70-30, the 75-25, 65-35 if you want to. But what you'll do is the stronger your requirement for a market condition, the less number of trades you're going to take. So it's about finding a happy medium that suits you as a trader, in that you're not sitting there with itchy trigger finger because you're not taking any trades, but equally you're not over trading. And again, there is no right or wrong. You don't know which to use. So just use something. But the best thing to do is to stick it in the back tester, get in the back tester, and put the EA in there. Load a set file. Anything will do. You know, some of these are other people's set files. So H1, M5. That one will do. What is that doing? Yeah, so that's the hourly. And again, last candle close must be beyond RSI level. Again, that's personal preference. I have it set to true, which means that it's got to be closed above that level, yeah, on the hourly, before I take a signal on the lower time frame. If you have that set to false, you could get in more aggressively again. So it's all about fine tuning. New Zealand dollar, US dollar ADR. So the dollar is rallying at the minute. So stick it in the back tester, put it in visual mode, and just let it go and watch it. Watch how much drawdown it gets into. Watch how long it takes to get into trades. Look how long it takes to get out of trades. So just visually see it doing its thing, and then you can fine tune it to what is more comfortable for you. Have I got something set wrong there, haven't I? Somewhere. Why is that not taking any trades? I say that and then it doesn't work. I've got something set wrong there. That was an RSI extension, wasn't it? I don't know. But yeah, I don't know what that set file's doing. Should be trading though. Have I found a bug? Anyway, I'll look into that in a minute. I don't know why they didn't trade. Oh, swaps. That's why. Swap costs. So you got swap cost filter as well. Just bear that in mind. This is an old set file when we actually had swaps that were a little bit lower, basically, or a little bit higher, actually. Okay, so just play with it, watch it. Obviously, the lower time frame you go on to as well, obviously the slower the thing is going to be. So I'm testing on tick level here. So when you're back testing, a good thing to do is to use control points. So because the EA runs on the 5-minute chart, what it will do is when you use control points, it will automatically default to the 1-minute chart, or depending which one you're using. Obviously, you can use different time frames. But if you use control points, it just goes to the time frame below the one that you're testing on, and it uses the OHLC of that, the open, high, low, close. So you'll see the speed of testing is infinitely faster when you're using control points. So we're not looking for accuracy of backtest here. We're looking for the thing to just trade so that we can see what it does. So control points is going to let that play out a lot faster. So this one, for example, you can see here, we were sitting in profit for ages. We didn't take anything. Because our target may be set too high. So you might, as a trader, think, well, that's ridiculous. I definitely would have taken profit there. Set your target lower and let it take profit and then see what happens. But also, whenever you've done any trades, you should always look at what happened after those trades. So when you're taking, I'm just waiting for this to actually close a position out. So when it closes a position out, it's important to go sort of 2 or 3 weeks into the future after that was closed out and see what happened to price, because you'll often find that you are getting out way too soon most of the time. I've picked probably the rangiest period of time ever in the euro US dollar, haven't I? It's just not moving. This was when Trump did his tariffs, isn't it? This is a really bad time to test it because the market was in absolute turmoil, wasn't it? We'll probably be in this for weeks. Anyway, back in profit again. So yeah, just test it. So there you go, they're out. There's a nice quick in and out look. So RSI extension to the upside, straight out, 1 ADR. That was 1 ADR above average exit. Yeah. So obviously that one took ages because it was a Trump. But yeah, watch it play out. And watch it basically trade and see what it does. If you're the type of trader that wants to be in and out quicker, 1 ADR targets are usually going to take 2 or 3 days to play out, sometimes longer. Your average entry in a position is going to be 2-3 trades with most positions. Some of them are going to be less, some of them are going to be more. But when you're doing this sort of back testing, it's showing you what happens. You're seeing days play out very, very quickly. So you can see how long you're going to need to be sitting in stuff. And you can see what happens afterwards. So there's an exit there. Way too soon. Entry, exit. Perfect. But still too soon. You see why I pick an ADR, yeah? When we've moved the average daily range, we tend to pull back from it, yeah? Same thing. So this is why we use ADR as a measurement. What we're looking for is how much does the market that I'm trading move on average in a day? That's what I should be aiming for, because on average, that's all I'm going to get, because it's not going to go further than that, because the odds of it going beyond that decrease dramatically, don't they? If you look at the ADR indicator, yeah, when we get to 125 ADR, there's a 23% chance it's going to go higher, which means there's a 77% chance it's actually not going to go higher. So I shouldn't be targeting more than an ADR of movement if I want to get out today, because the chances of it getting beyond there are very remote. Not remote, but they're less. We're at ADR today. 42% of the time it gets beyond that. But when it gets to 125, that dramatically changes. So when you're back testing, you will see these things playing out. Look, we moved down an ADR, then we pulled back. We moved up an ADR, we pulled back. We moved up an ADR, we pulled back. Why? Because that's the average we move. That's why we use it. So if you want to get in and out faster, use targets of half an ADR, yeah, not one ADR, and you'll be scalping faster movements. But also, when you're in your positions that are going sort of 4 to 6 against you, you're going to be getting out here, which is probably going to go up here. So again, there isn't a right or wrong. They will both make money. If I change this now to 0.5 and run the same test, you'll see we'll get very different trades. It will still have a nice profitable equity curve, but it will be a very different style of trading. But it's the same thing. We're just making money out of market movement. This will get out much quicker. Okay, so we're out of that one. Remember the last time we were in this one for ages? Yeah. You're just going to get out faster. So you're going to get your profit quicker, but your profit is going to be smaller. So what type of trader are you? There's nothing wrong with this set file. There's nothing wrong with the set file we just tested. They both make money. They're just different. So, look at that. We left tons on the table. But it could have equally just popped. And you'd be like, oh, I'm glad I got out there. But you don't know that until the market's moved, do you? When you're in these tight rangey, where we're not going anywhere for a week like we had last week, half an ADR is probably a better target. RSI swings happen in days. Yeah. So you can have in 2 days, you can easily have swings in both directions. See, this one here is a good example. Oh, can't get back to it. So that's half an ADR pullback, 50%. Yeah. Half an ADR pullback. That one went 1 ADR, but then it stopped. Yeah. So ADR, this is why I work in ADR. Everything you do, you have to work in ADR because you've got to be matching your trading to the market conditions. The market is not, if there's no point getting in here and going, oh, I'm going to target that and I want to be out of it today. It's not going to get there. It's going to get there if you're lucky, 42% of the time. That's all you're going to get. So if you've got something when you get in, there's a 42% chance of getting out today, brilliant. If you want a higher chance of getting out today, target less and you will. But most of the time it's going to take 2 to 3 days to get in and out of a trade. But with RSI extensions, you can get, that's RSI above 70. It pulled back and then it went above 70 again. So we got 2 trades out of it. If you had a 1 ADR target, which is there, what you actually did was you took 1, 2, and then you would have got out. If that was, in fact, the average would have been there, so you probably wouldn't have got out. But and this is what I say. It's entirely up to you as a trader, and the only way you're going to know what the best settings for you are is if you go and you do this and you test it and you watch it play out. If you look at this over a period of 3 to 6 months, I don't know, we started in January, we're in March now, so I've seen 2 months of my life fly past in minutes. If you're looking at this going, this is the type of trading I like. I'm in, I'm out, I'm in, I'm out, and I'm loving it. That's your set file. If you're looking at this and going, I hate this, I'm just leaving so much money on the table, and you're more patient and you want to let things go longer, this is not the set file for you, but you're not going to know it until you see it happen. In a minute, this thing's going to get into a squeeze and it's going to get into 6 or 8 positions and it's going to go into heavy drawdown. If you're the type of trader that doesn't like that, you either need to enact some drawdown control within the EA using the settings, or you want to change your spacing, or you want to change your targeting to something different. Again, there isn't a one size fits all. You can teach 100 traders the same strategy. 50 of them will love it, 50 of them will hate it. 50 of them will come out with, if you get them all to execute the strategy in exactly the same way, 50 of them will come out with profit, 50 will come out with a loss, because everybody is going to be completely different. When you press that button, or when you program the EA to press that button, is going to be different to everybody else, because your broker is going to give you a different price. Your broker is going to give you a different spread. You'll have a different swap figure, which means that you may take a trade that they don't trade. Your RSI settings might be median instead of close. Doesn't matter. One of them will work, one of them won't. They're just different. Everything is different. Everybody's hunting for the strategy, the best. There isn't a best. There is just different. Do what you do. Whether I press the button today or tomorrow on a trade is irrelevant, because it's not pressing the button that makes the money. It's exiting the trade that makes the money. And you cannot tell when to exit. You certainly don't know when to get in, because the market will not say, oh, I'm going to reverse now. The market will just do what the market does. It goes up and down all day long. That's what it does. No one on the planet can tell you whether it's the best to get in now or not. They will try. You go onto YouTube channels, they certainly think they know what they're talking about, don't they? But look at that. Half an ADR pullback. So pull back 50% of the day's range. Everything moves in ADR. This is why everything we do is ADR. This all works on ADR. The average daily range of this instrument is that. Yeah. So we are working within variables of the movement that this thing does on average. But its average will also change. This number will change on a daily basis. So we have to change with it. If you use the same ADR today, in 6 months' time, this will not work, because it's got to be dynamic and adapt to current market conditions. But what's the best? No one knows, do they? No, I'm not, Robert. I'm not a coder. This thought, do you prefer coding in C? I don't prefer coding in anything at all. I haven't got no preference on coding. C's. I mean, people on TradingView use Python. I could code in Python, but I think with terminals, with the way that you access market price is entirely down to preference. The reason I like MT4 is because it's stable, it's software driven rather than web driven, because that's just what I prefer. And I know it. I've been using it for 20 years and it does what I need. I've used TradingView, I've used Trader8, I've used CTrader, I've used NinjaTrader, I've used all sorts of other stuff. They all work. They plot price on the screen. At the end of the day, that's all it's doing. It's getting a price from my broker and it's plotting a candlestick. Use whatever you want. The reason I like MT4 is because the MQL language is purely built for trading. It is a trading language. Yeah, C++, C#, C whatever you want to call it, is a programming language which is universal. So that's fine. But this has got specific shortcuts that make it very, very easy to code trading algorithms. It's the market leader. It's been the market leader for 20 years. Nothing's come close. TradingView is incredibly popular. But it's different, isn't it? Again, it's not, nothing's better than anything else. This is better for me because I can knock an EA up in 15 minutes. If I go and try and knock an EA up in 15 minutes in Python, I can't, because I know this. It's not better. It's just what I do. It's just is what it is. It's what I like and it's what I use. The only thing I will say is MT4 is better than MT5 just because it's less buggy. So if I had a preference, I would be using MT4. However, saying that, I've been coding quite a bit in MT5 recently because I've been building a website with some guys and they want EA development in there in part of the website, which I've been helping them with. And I've been doing a bit more MT5 coding and it's just the terminal, I think, is just buggy. MQL5 as a language is better than MQL4. It's got more stuff that you can use with it, but it's just buggy, the terminal. People, it still happens. It does an update, like somebody said earlier, I think it was Vitaly. It does an update and it breaks. This is what I use to trade. I can't have it breaking. It's got to work, which is why I like it. And I also like it that it's sitting on my machine here. TradingView is a website. At the end of the day, if your user details for TradingView get hacked or leaked in a breach anywhere, they've got access to all your trading accounts. A hacker has got to put something on my machine here and access it in the good old-fashioned way, which they don't do anymore because they're all after websites now. So they still do them, but that's why I prefer software-based rather than web-based. But, the big trend at the moment is futures, isn't it? Because obviously it's what all the prop firms are offering. So everybody's using TradingView, they're using TraderVate, they're using NinjaTrader, because that's the software that they bundle with it. But better, worse, is what it is. How are things with the new site? I don't know. I've got it's on my list to do today. In fact, I'm spending all day coding with them tomorrow. So I don't know is the honest answer. To be honest, I don't think it's got very far because I was building quite a lot of it. And I haven't been here. So I don't think it's got much progression. As far as I understand it, the last time I talked to them was it's ready to go. The last thing they've got to do is the email system. And I think that was it. But it's going to be very much a beta version. So I'll let you know on that. So the members, obviously, I was going to say I will get you access to that at some point. But yeah, I don't know. I don't know how long it's going to be. It's one of those things, it's a bit of a piece of string because they constantly go, oh, wouldn't it be great if it did that? And it never gets released. It's one of those things that's constantly evolving. So it never actually gets released. It's changing all the time. But it's very close, I think, to what they want it to do in a kind of version 1 format, if you like, basic format. But there's still a lot of stuff that's not right. I think personally, and I've said this, they've made it too configurable. You're giving people too much rope, and you know what happens when you give people too much rope. So the one of the things in there is a bias system, and there's too many settings in there. So you can set this thing up to make anything look really strong or anything look really weak, but there are defaults. But the defaults I don't think are right. So I don't know. It's one of those things that's a lot of good ideas, which there's too many of them and not enough hours in the day to actually build what they want. I think they're trying to run a bit fast, but I don't know. It's close anyway. So it's still being worked on. But I'll update you on that. I might even have an update for you on Wednesday on that in the members stream. But it depends how we get on tomorrow. Who knows? Anyway, so I'll leave you there today. Nothing's happening with the indices today, not tradable. So we'll wait and come back to them this afternoon. Everything else I'm in at the moment is just in. So I've been watching this P&L flip-flop from 5 to 10% for the last week. I've not, as you can see, I haven't banked anything at all, which is fine, but I will probably bank some pound US dollar today by the looks of things. Yeah, ADR today is my break even. So if we can get an ADR hit on that today, hopefully Trump will say something and it'll rally the dollar. But I will do some banking and some drawdown control. Oil is going absolutely nowhere. It's still well within my 5% parameters. So we are just sitting around. Swiss yen, again, I'm giving everything 5%. We're sitting around. I've got an aggressive on that now up here. Just move that up. I'm just going to get that second sell on in a second. That's about to give a reverse alert on the hourly. So that one just can't get out of anything. I'm literally just sitting in drawdown. That's it. There's nothing you can do with it. Markets are stuck. But moving nicely on the US dollar today. So we'll see if we can continue on that. Right, so I'll be back this afternoon at, I need to change that message on the live room. Put that up now. So I'll be back this afternoon at 2:30. We'll go through the US indices, go through FX and everything again this afternoon. Yes, yay, that's today. So yeah, back this afternoon. We'll see if we can get some money out of the indices. But other than that, I will be around on Discord this morning. So if you need anything, let me know. Other than that, if you're a member, I will see you on Wednesday morning. If you're coming to this afternoon stream, I will see you this afternoon. Have a good day.